Yeah, that's okay. We're gonna be live streamed on YouTube.
Hmm?
We're live streaming on YouTube now.
Oh,
We have a
really?
YouTube channel, so I
Okay.
don't have to send anyone Zoom links anymore. That's great. Okay. Yes, you need to share a screen, correct?
I gave you that, yep, the graphic, just so I can pull that up.
Share. We're going to put this down. Where did it go? I just had it. Right here. I'm gonna put this down here. Is that okay?
Mhm.
All right, we good?
Yep.
Can you guys hear us on YouTube, on Zoom?
Yes.
Thank you.
Who's on Zoom?
Hi, Flo.
Yes, sir.
Hey,
How are you?
Good, how are you?
You good? Let me know when you're done and I'll finish up for you.
Okay, you need my card, right?
Yeah, what's my?
He said you're gonna go pick it up for me?
Yeah.
Yeah, let me give you that.
Okay. He's so hungry.
Yeah, very. I forgot about that. What's she?
We're not saying that. It's not like Kendrick
Oh,
Parks.
All the cover for me.
Well, no, girl, we ain't gonna answer.
I think it's dark in the office today, Charlie. I have a question for you.
No, why about that?
Because I have no other questions for you today, so why?
I know. I think because I turned on, I thought I turned on the lights and I turned the sun on.
Oh, it's probably.
Well, Let's put the picture on. That's it.
Okay, so you know what? I'm 33 years old, and when I talk to Charlie, I feel like I'm 12. Charlie makes me feel like a child. She's mature enough for all of us.
How old are you? How old are you, Linda?
I lost my American Express at Kroger.
Oh,
No, I know I'm 33, right?
There's that.
No, I'm
Okay.
just saying like, I was like, almost 15 years. Right.
Really? I told them to order it to be picked up at Young and stuff.
Okay. Yeah, we don't have a lot of people. I'll probably be a quick class. I don't got that much to talk about.
Good.
All right. The first thing I wanted to talk to you guys about is a lot of people have been saying, like there's a Mishta $25,000 grant. This is not to buy a house, okay? The Mishta down payment assistance is still $10,000. This 25,000, this is basically that people that were impacted by the pandemic. And so it's a pandemic related financial hardship. So if you or you know anybody that's basically behind on any mortgage payments, utility payments, taxes, water, and you know, anything that's due, like the loss of job or loss of, you know, if people passed away, if they lost their spouse and those people were the source of income. So the state of Michigan, there is an application and requirements that you have to meet. This is basically just for you guys to know, like, you know, if people ask you about this, you should know how to address it. You know, this is part of your industry, you know, stuff like that. So they'll know. The 25,000, basically, it has some restrictions here. I could tell you, oh man, this is not the one that I wanted. Do this. I think I can do it from my phone. 1 second. With any grant or loan, there's always going to be guidelines and restrictions. So I wanted to see, I think Sean.
Natalie, I'm sorry, a little
Yeah.
bit late. Did you explain about that 25 grant? It's,
Yeah. So basically this is, and why is it a Mishta loan? Anything that's given by the state of Michigan is Mishta. It stands for Michigan State Housing Department Authority, okay? So there's Mishta down payment assistance, which we know the 10,000. This $25,000 is grants to homeowners that are behind on mortgage, utility payments, taxes, water bills, anything like that.
okay.
I do not believe it applies to rent, so if people are behind on the rent, it's not gonna help them. The state is not gonna say, okay, well, here you go, you know, this covers, at least nothing that I know of, as of yet.
It's like everyone that's behind their bills are qualified for it?
That's for the state to decide.
Okay.
Okay, so there are, let me see something. I want to show you this one, because this one actually gives you the breakdown.
After you explain this, can you circle back to the $10,000 one? Because I always get so many questions about it.
Sure,
You still not do those, Dalia,
correct.
the stuff?
Oh, you don't do them?
No.
Oh, okay.
Big time. I'll go over everything with you guys. Just give me a second. So inbox, Robert. Here's the direct link. So let me see if I can get to it here. So www. Hopefully that will work. Okay. So basically it just says Governor Whitmore approved the grant. This is the total amount for the grant. Based on unemployed individuals and the number of mortgagors with delinquent mortgage payments. Okay, so basically who's eligible? So homeowners with a household income less than 150% of the area median income. So I would say probably in our area, anything over 80,000, if your household has a current income over 80,000, you don't qualify. I want to say 70, but I think 80 is more of a number. Homeowners who own and occupy their property as their primary residence. This right here is what told me it's not for renters right now, because it doesn't state that. That means you have to own and occupy your property and you have to be behind on this. Homeowners must have and explain a financial hardship directly related to COVID-19. Okay, anybody can do that. Up to $25,000 grant per household to pay. These are the things it's gonna basically cover.
Do you still have to be unemployed?
No, you just have to be behind.
Behind,
Mhm.
is it a certain amount of months, or is it a number that? they
No,
look
I don't
at?
think so. You just have to, say, well, I've been behind since September, October, November of 2021, it just keeps rolling over, and then I have all these penalties and fees.
Right,
They'll come in and they'll approve you for the grant, they'll cover, pay everything to date,
okay.
whatever you're
Will
behind.
the state pay directly, let's say if you're behind on the taxes, does the state pay directly to the
Yeah,
Wayne County Treasurer?
Yeah.
So it won't come to.
No. absolutely. They're gonna pay whoever, even if it's for the mortgage, they're gonna pay the mortgage company directly. It won't be anything to the client, I don't believe. And then here, they could go, I can send you guys this or have Melissa send it. Basically, they have to do it on their own. I mean, I don't know if it's allowable, if you ever had a client, if you are able to collect like a fee for assisting them, getting that documentation, and then they can always check the status, and then there's questions. So this is basically a little bit more, things if you want to market it, none of that really matters. So this is basically, anyone tells you, hey, what's going on? The state is giving us $25,000 to buy a house. No. Yeah, no, this is only for delinquent. It's only, again, Mishta, because it's, even though a lot of people relate Mishta to the down payment assistance program, it's anything that Michigan financially contributes, grants or loans or whatever, it's always gonna state Mishta, because that's who's originating that. To go to your point, why we don't do Mishta loans. Mishta, the state of Michigan has their own set of guidelines that, there's just so much. So it's not only, you have to get it underwritten per your Fannie Mae, Freddie Mac guidelines. And then once that's done, then you have to send it to the state. And basically they underwrite it. The interest rate's always higher. It's a nightmare. There's rules, like, for example, if you're gonna buy the house, any adults living in that property that are 18 or older have to go on the loan. They have to.
What?
Yeah, that's one
So if
thing
the
about,
household has 6 people, 6 of them has to go. on
if
the
they're
loan.
18 or older, yes, unless they can prove that they're full-time student.
But the only thing that Mishta would be providing is $10,000, and then
Correct.
the rest would be have to go, like, for example, to you or whatever other money.
Right. So they're always required to their down payment, and Mishta does conventional and FHA. You know, this is really geared, I feel like, towards, you know, single moms or dads that only have one income. You know, it's really hard, they're paycheck to paycheck, things like that. It is out there, and not only that, so the whole part of this, when I was with my previous employer, I begged him, let me do Mishta, let me do it. I could do it. I'll do all the Mishta loans in the office. He got sick of me. So he's like, you know what? If you want the headache, go ahead. But I don't want to hear about it. Sure enough, 40 days, listing agent calling, it's been 40 days. I didn't know they were doing Mishta and blah, blah, blah. And now, because Mishta has reduced ratios, so us, we can go up to 40, 50, sometimes 52, 53. 54. With Mishta, it's 41. So you might think when we pre-approve them, yeah, okay, here you go, you're good. 45 DTI. They don't have money, right? So now their ratios go over. Taxes come in a little bit higher. Homeowners insurance comes in higher. Their ratios now jump to 43. They got to pay off a $2,000 credit card. They didn't have money to begin with.
Wow.
What makes you think they're gonna now go in there and pay the 2,000? No.
Do you
No.
have to disclose to the listing agent if it's initial loan?
You guys do not have to disclose it. No, we do not have to disclose technically anything.
I'm sure they're gonna ask.
But, and you know, in this business, full disclosure is always the best policy.
Right.
You know, you want to save yourself, we have to set proper expectations on both sides. That's why you tell the listing agent, look, I got a Mishta buyer. She's solid. She's a single mom. She needs the help with the down payment. In this market, you'll never get your offer accepted with Mishta.
FHA, they will not accept.
With seller. So that's how I usually try to convert them. And this is how I usually win Mishta buyers. By the time they go here, let me pull this up. By the time people go like this. So they're gonna say, I'm gonna say, okay, no problem. You want down payment assistance, go to the state of Michigan website and do the application and see if you want to, if you qualify. So they give you all this information. So basically it tells you the different types of loans that's available. So it's either 7,500 or 10,000. Tax credit, that's the class you have to take. Let's see, I don't know. It should say, so by the time people come, if even find, look at, even come here to find the spot to go and apply for Mishta, they're like, you know what, no, forget it, I'll take seller concessions. You know what I mean? But that's why I tell them, look, this is what you would need if you just go FHA and you have the seller concessions, which you guys know in this market, nobody's giving seller concessions. So, you know, I don't know why you would even offer Mishta, but it's always good for you to have as much knowledge, so when people talk to you about Mishta, you can address it accordingly. Say, look, Mishta's got to be our last option, and I'm telling you, if you put an offer and they are aware that you're obtaining Mishta financing, these loans, they're higher rates, they have extra restrictions. It takes them about 60 days for them to, the loan itself. So usually we're doing what, 30, 45 tops. No, they're for sure, they're like 50, 60 days. And what seller is gonna wait 2 months to close?
So this is not really a grant. the 10,000
No, this is a loan.
Okay.
It stays as a lien on the property, it's never forgiven. So,
They still gotta put 1% down.
yeah, they gotta contribute 1%.
They gotta still put 1%
Out of the
down.
down, for the down payment.
Yes.
So if it's 100,000, it's $1,000 out of their pocket.
So that's what she's saying about seller concessions, because the majority of the money is gonna go to tax and insurance and all that. So that's how she would sell it. It's get 6% seller concessions. You still gotta put 1% down, then in the day, you're gonna put 2.5 down. That's how you sell them. That's how we would sell them. I wouldn't do it. It's just,
Do they have the same requirements as FHA?
same requirements, and it's underwritten twice.
Okay.
That's why it takes 6 years. So the bank underwrites it, and then it goes to Mishta, and then they underwrite it, and then they hit up the file. All kinds of stuff.
And for, last time you were talking about, like you guys are paying for the appraisal till, what's the
March 31st, I think,
March?
now,
What's that?
appraisal, March 31st, right?
Yeah,
March 31st?
yeah. I think what, is it, like, what if we originate the loan, but it doesn't close until April? As long as we get that initial stuff, the stuff. So any applications taken April 1st or later will not get that credit.
And is it for conventional and
Purchases.
FHA?
Yeah.
Okay.
And it's purchase, yeah, purchases. only.
You'll have them pay for the appraisal upfront and then credit it back at closing.
Yeah, exactly. Because they gotta meet those requirements and they gotta actually close. So the bank is not gonna pay for the appraisal and then you don't close. And then they're all that money. No, you have to pay for it. Everything goes well, we'll credit it in the back.
Yeah, I don't think anyone's gonna accept the initial deal.
No.
Yes, yeah, I don't know.
Hmm?
Yeah.
They're not even giving FHA. Like, I kept on, but I know, but it's like, there's like 4 houses that are built.
Yeah.
There's barely any. Yeah, so I always ask them, they're like, oh, we're just.
It's not that we don't want to do it, it's just
No, I know, the market.
certain
The
banks,
sellers,
it's only certain banks. that do it.
It's not only that, listen, genuinely from my heart,
We would love to. do
I
it.
would love to do it. I wish I had something like this to offer people. But when you take that, it sounds like it's, all wonderful, right? Then when you're doing, during the transaction, all the things that keep coming up, and we need this, and we need this, and we need this, and we need this. It takes the transaction from being positive to negative. That's when it doesn't only hurt us, it hurts you guys too. You guys refer, oh, my in-house lender, we'll do Mishta, right? It's a bang up job. They barely have credit. They, okay, we don't know that, but, really, she's technically not married, but her husband's gonna live in the house, but they don't want us to know that. Bang up job. Go use somebody else. Let them find their Mishta. You can go here. There's a list of lenders. You're welcome, but check your plan B, just in case. 9 times out of 10, when they see how Mishta buyers are treated, they wind up saying, okay, you know what, I saved $3,000, $4,000, please, let me just go regular FHA. And your chances are still slim, but they're better than Mishta. That listing agent, as you guys all know, that's ever been on the list side. You take top to bottom, where's Mishta gonna go on your? The only way is if, like, you submit your offer with a letter, I'm a single mom. My kids have been in the school and they've been enough trauma in life and this would really mean, and you have the seller personally connected at that. Other than that, they're out. I don't know why I can't open this. I wanted to basically just do a little bit of, like a rate, how you guys could see the difference. I don't want you guys anybody psyching you guys out. Rates are not high. They're in the 4% now in the 30-year, 4.1, 4.2. They're still low. They're still low. I was actually processing mortgages. We were doing 100% financing. Their first mortgage was 80%. They had about a 8.5%, 9% interest rate. Then they had a second loan for the other 20%. It was a variable rate and it started at 12%. And people were like, okay, we'll take it. Get us the house. So when people tell you, oh, rates are high now, no, actually they're not. They've gone up, yeah. But that was like, nobody even could have ever expected rates to be in 2s and 3s. that was like, you know, one-time thing, but still 4% is still good.
Now,
Now,
what's the rate for the FHA?
I would say it's about the same thing. I mean, depending on what type of FHA buyer you are. So obviously, if your score is 600, you're gonna get a low 4. If your score is like 660, 670, you really didn't have too much, you have a good income, FHA is gonna reward you for that, and you probably get maybe a high 3, low 4. So it just depends on their profile when it comes to FHA. You could either be on one of the broads, you know what I mean, any of where in that range. So, basically what I did, so you guys know if you get any buyers and their pre-approval was dated for 3 months, even 2 months really, because this rate hike just happened within the past 30 days, right? So anything that's dated for like 30, 60, 90 days old, you definitely want to get them back with their lender. Tell them, look, rates have gone up 1%. If this was the max you qualified for, it's probably gonna adjust. So definitely keep your eye out for that. Make sure you're getting those updated. And then, I don't know, anything else? Anybody, you guys want to talk about anything else? Nothing. One other thing that I feel like I kind of noticed, I feel like appraisals have been coming in a little bit more conservatively. I don't know if you guys have faced any of that on your ends, but I feel like what I was seeing is that gradual increase, and now I feel like it's kind of stopping and maybe coming down a bit. So hopefully this is going to help to control the inflation, at least on the housing market, in my opinion. And then rates, maybe hopefully will slow down those buyers a little bit. So we can kind of even this out.
Do you think in the summer, the interest rate will go up a little bit more?
I really don't have an educated guess on that. Me as like just somebody that watches the news, I would say they're probably gonna hang out here for a while. What do you think?
Their increase went up already last month, which we anticipated. Just shot up like in 1 month.
So what he's saying is this, do we think it's gonna come back
We
down?
knew they were gonna go up to around this, right? We
No.
thought it would go gradually. It went up one time, we're probably gonna stay there. We won't know.
So now they are, let's say, in the 4.1, 4.2. Do you think in the summer they will go like 4.8, like that much?
No, I don't think so.
They're gonna
I
jump
think they're right there.
around that.
They went down today, so probably like 4.1, so it's gonna hover. They have to keep it like that. I told you guys in the last meeting, they can't keep increasing the rates like that because they gotta keep the economy afloat. And I told this 2 years ago, if anybody was here. Oh, the market's gonna crash, they can't. The economy, the real estate market is what's gonna keep the economy afloat. And that's what it's been doing the last 2 years. Inflation has gone up, but the prices, people are buying, people are putting money down. You know, they have to keep the rates low, so they can keep people buying. Now, as inflation goes up, the rates have to go up, but it's got to top off at a certain amount. If rates keep going up, but we can buy them, it's gonna hurt the economy.
Let's go.
Oh, yeah, but that was that what that
I
was?
didn't know that. You guys like that? Jamal's laughing, what did I say?
I looked at them like, did they do something? I don't know. Maybe a whoopee cushion? That's what that was, right? Yeah. So, but other than that, yeah, I don't see, like, a lot of people are saying, oh, it's gonna crash, it's gonna crash. The reason, in my opinion, I was, you know, in the industry back when it did crash. I was actually one of those people that bought my house at peak. And like, not like 3 weeks later, it crashed.
But the reason why it crashed is because it's not because of the market, it was the loans that were.
Yeah, it's the low.
0% down, nothing this down, blah, blah, stated income, stated assets. Everybody was buying $1 million homes, they work at a gas station, and then boom, they can't make the payment. Can't make the payment.
And
No, I don't
after
care.
that, the banks like flood the market with houses.
Yeah, because
Yeah.
nobody cared. Everybody, if I bought a house 0 down, didn't cost me anything. Screw this house, I don't care about it. It didn't cost nothing. Now,
They,
if you put
they
20%
they
down,
didn't
I can
have,
use that.
yeah, they didn't have any equity when that happened. Nobody had equity. They were in negative amortization. Meaning now that just their minimum payment wasn't going towards principal, that now it's starting to go negative. They're not even covering the interest.
Yeah,
on the
that
loan.
too, it's a negative.
Yeah, so,
Yeah, second-
yeah, it was
second
all the
is-
second mortgages, exactly, right. So everyone said, okay, well, nobody had equity. Now, right now, I mean, think about it. Even people that bought their house, let's say 2-3 years ago, I would say like a median, at least they have about
They're
50
selling, they're
Gs.
making money.
They probably have about 50 Gs equity, right?
Yeah.
Okay, so imagine knowing you're sitting on 50, 60, 70,000, right? Who doesn't want to sell their house and take that money and use it as a down payment and have a nicer, bigger house and the payment the same? But in this market, it's not possible.
Yeah, because there's nothing.
So we've never, every time something happens with the housing market and economy, it's always something, that's, similar, but, in its own way, something like we never experienced before. So we just kind of gotta roll with the punches, I would say, and hopefully that will happen. More people we need prices to come down a little bit in order to motivate those buyers to actually sell their house and be able to go and buy a new one. I have at least, I would say, 5 pre-approvals, and they're all for sellers. And the seller said, no way. When I find something, I'll list my house. Until then, I'm not doing nothing. Since when we never did that, did we? Never. It would always be like, no, sell your house, don't worry, you're gonna find something.
No, it's-
Now you're like,
This is scary.
okay, yeah, you can't say no, you can't.
Yeah,
So-
I don't think the price is ever gonna come down. I think even with appraisals, they're kind of benefiting us when we're on like the buyer side, because like they're adjusting to that market.
I agree with you, but to an extent. I've been seeing what these appraisals are coming in at. It's ridiculous. No, it's ridiculous. I'm sorry.
No.
Like $30,000 appraisal guarantees, full appraisal guarantees.
I mean, I did that in I'm closing today.
Well,
I put 31 over asking price and I put 21,000 appraisal guarantee and it appraised for the price I put, 320.
there you go.
Because there's comps.
Yeah.
So the appraisers right now, I know the next couple of months is gonna be tough, because the comps are still coming up. Right? They have to adjust to the market.
Because they put the listed price for 289.
Yeah, we see it all the time.
And I know it's gonna appraise. Like now listing agents are like always listing their houses under. They wanna get like into a war, multiple offers,
right.
multiple showings, and like within 2 days, they'll put it pending. That's it.
I had a deal, he put 30 over asking, 40 over asking, right? And it appraised for 80,000 over that.
Wow.
The sellers didn't know. I was like, no way. And I pulled up the comps, I'm like, maybe he messed up by 380 instead of 480. And I looked, I'm like, the guy was happy.
Of course, it would
I
be
know
better.
that.
He has
So
like,
hit or miss, everybody.
he has like
Yeah.
80,000
I know that.
equity in this.
Yeah.
He went 20 over asking and then the house appraised 60
Over the.
over the asking
Yeah.
price.
so
He
it's
got
hit or
lucky.
miss.
He was worried about him. He's like, oh, good, I'm good. Yeah.
I mean,
So-
sometimes that happens.
Yeah.
But a majority of our deals, this is what's like, I look at it and I'm like, how is this house selling for 230 in this area? Who's buying this house?
It's like the Zillow for sale, the physicals.
That house really should be 160, 170. Well, if your job and our job is to not really tell them, well, you can't, no, you're their agent, you represent them, you try to execute the deal to whatever makes them happy without making them, giving them the false impression that paying 30,000 is a good thing over, because, only common sense would tell you. But in this market, if they want the house and this is what they have to do to get the house. And it's our job as the loan officer to get them the loan. It doesn't matter to us why they decided to pay more or whatever. As long as they're paying out of their pocket, that's a choice that they make.
You guys gotta keep in mind too, if they're putting 30 over asking, it doesn't appraise. You guys already know that there was big chance it's not gonna appraise, because you put in 30 over asking. If it was listed at 219, you put 250, if it was worth 250, they would list it at 250. Right? I mean, so.
Also, I want to bring up a very important thing that I want to make sure, like, to get out there so you guys kind of understand. So, with priority one lending, if we have, we basically would call it a correspondent deal, which means that priority one is originating this loan, okay? So everything that we do is priority one. We only do this currently for conventional buyers, okay? So basically, it's our, resource, our closing department, our appraisers, which is, that's why I'm bringing this up, because that's our board of appraisers. It's a correspondent deal. Can we help with, lender credits or like, things like this, or really kind of push to try to go and beat other banks and stuff like that with the rate? That's gotta be a correspondent deal. Okay, those are our appraisers. No, whatever, if we need to talk to them about things coming in short or taking other things into considerations, they could, we have a little bit more, like, closer contact with them. If it's a broker deal, which means if it's FHA and the FICO score is 600 or 620, or it's an investment and we're trying to do, the best for this client, get them the best rates or whatever, it's a complete broker deal. Meaning we can't do nothing about it. The only thing we could do is probably waive an underwriting fee. Other than that, the rate can't do nothing. Their underwriting fee can't do nothing. Who they pick for the appraiser can't do nothing. So set those expectations. Just know if you have an FHA buy or whatever, it's the luck of the draw. If it's a correspondent deal, know that it's our board, our guys, they're familiar with the area, things like that. Yeah, we service it, we fund it. That's why we have a little bit more control over the file. Other than that, I really can't think of anything else that's really going on. Any questions, anything? All right. Were you gonna ask something? Did I miss your hand? No. Okay.
So what I'm gonna do, I think, for the next week or so, I'm gonna bring in a whole team, from processors to closers to funders. You guys, I wanna put a face behind the emails. I'm sure you guys get all the emails, right? Me, Talia, Lama, Torella, this person, Stacy. So everybody behind closed doors, the back end, I'm gonna bring them in so you guys can meet them all. It's not one or two people, it's probably like good 10, 15. So you guys can just meet them all, from the operations manager to the processors, to the funders, to the closers, to the person who orders title, to the person who orders appraisals, to all that. So you guys can just meet them, ask them questions if you want, and stuff like that. I think it'll be good for you guys, just to meet everybody. So you see the back end.
Because what you guys have to understand is, like, I know a lot of banks are different, okay, but like if you go to Citizens or Fifth Third or Wells Fargo, that person that took your loan application has no clue what's going on with your file. They are complete, just a face. That's all they are to that file, really. It goes to their processors, it goes to their underwriters, and they basically, whatever, with us, we have that direct contact. I was gonna bring up a point. Oh, so when you guys are doing a loan, like say for example, from a broker with us and the processor reaches out to the buyer for stuff, that processor is your lifeline. So you wanna know that processor. So that way you don't have to go through the middleman. I did my job, the file's there, now whatever we need from the client, they have to provide that stuff. Now, obviously, we shadow the loan, make sure whatever we could do to help move it along. But if you guys as realtors, your clients trust you guys so much, if they call and say, well, they want 1, 2, and 3, and I really don't know, whatever, you could say, hey, who's the processor? Torella Lama? You know what? I'm gonna call her. Hey, Torella, what's going on? It helps. And then once they make that connection with you, it's like it makes them want to work hard for you and process your loan and get things through fast. And I mean, they have to keep everything fair, but one by one. But for me, like, I'm glad I knew Lama when I did my loan. Right. But anyways, all right,
No,
good plan.
We don't have the time to do it. Can't sit there and hold the customer's hand or roll. You know what happened to me 2 years ago, so I stopped.
Yeah. So it's, just, communication is key. That's what I'm saying, if they talk to the processors directly too, they know that will help everything move along quicker.
Yeah, and we let the clients know, you'll get an email or call from the processor. Finalize it too.
All right, that'll conclude this class, you guys. As always, thank you for coming.
Thank you,
Got it? Huh? Oh, yeah. I don't know, I don't even know how to do it.
Appraise the house lot.
You're gonna get a call from.
Yeah. So, can I get a